Welcome to Financial Media. I'm your host, and as always, make sure to like, comment, and subscribe below. With that being said, what are we talking about today? We're discussing the overall stock portfolio. How much have I appreciated? What is my current assets? What are my current index funds? How many accounts do I have? Well, let's get started. The first thing is that I have 3 brokerage accounts in my main Fidelity portfolio. I have a value account, a growth account, and a retirement account. Now, in my second overall portfolio, I have an M1 Finance account. This is with a shared partner, a joint account, and it has roughly 20 something assets. With that being said, I'm not really focused more on my joint account and more mainly focused on my main account, but I do like to go back and forth, and I do want to be able to describe everything to you as possible as I can. That being said, let's get started into my overall main Fidelity account, and I will start with my value portfolio. In my value portfolio, my first stock is ticker symbol DFS, where I have currently a cost basis of $96.62. My overall amount of shares that I have within the company is 16.826 shares. And the overall current value of that is $1,986.98. I bought the stock around, at a good price, and it's appreciated high in value now. And my overall total gain is 22.21%. My second stock within my value portfolio is ticker symbol KO, Coca-Cola. I bought the stock around $60 and average cost basis is around $60.12. I have over 41.202 shares. This mainly because I want to focus on just achieving that high dividend that Coke has been guaranteeing most investors for a long time. And I'm mainly focused on value within this account, so I'm not really worried about appreciation and growth in any of these stocks. My overall current value within, is $2,496.01. With that being said, my total gain is very low. It's only 0.76%. And then again, I'm not really worried about the appreciation. I'm focused mainly on the dividends that I receive from Coca-Cola, and I keep reinvesting them. My third company that I own is Microsoft, ticker symbol MSFT. I bought this company at a very good price. I wish that I would have bought more. My overall average cost basis was $249.89. When it was going down, I was getting some of the shares. And sadly, I only ended up with 4.449 shares. I wish that I would have purchased more shares at the time. But then again, I wasn't really focused on that, and I was more focused on other companies at the time, and that's probably why I didn't buy more shares. But then we do learn. My overall current value within this is $1,503.71. My total gain/loss is 35.25%. I'm very appreciative of that. Just wishing I would have bought more. But anyways, we're going to go dive into the last stock that I own within my value portfolio, which is PEP. Oh, wait, no, not my last stock. My next stock, which is PepsiCo, ticker symbol PEP. I have an average cost basis of $177.64. Then again, I was focused more on, not really the appreciating the value of these companies, these consumer discretionary stocks, more worried basically on how much dividends they can give me yearly and, focusing on the amount of how much I could receive long term. With that being said, I have over 17.085 shares within PepsiCo, and that equates to $3,170.97. With that, I have an overall total gain is 4.48%. And yeah, like I said, it's not really that much, but it's still something that I'm more focused on, dividends. Anyways, my last company within my value portfolio is Procter & Gamble. Like anything, this is a company that doesn't really appreciate in value, but it has great products And that's why I focus mainly on purchasing the company time and time again when it goes low. Just like all the other companies that I own within this portfolio, I purchase them when they go low, allowing me to appreciate higher value and always continue to stay up within the market. Not like saying you can, because reality is we can't predict what will happen. But like anything else, this is what my plan is, just to buy certain assets that are focused on dividend drive. Anyways, Procter Gamble, I currently own, I bought an average cost basis of $140.92, and I have 5.802 shares. This equates to roughly $884.80. It's a pretty good overall appreciation, like in overall like gain I had about 8.21% within the company. Overall percentage growth, and I'm pretty appreciative of that because like I didn't expect the company to even grow as high as it did, but it's doing as well, and I'm really appreciative of that. That being said, my overall total account value is $10,043.84. And my overall gain within the portfolio is 10.76%, which is basically the average market gain of 10% that I've achieved within this own portfolio myself. And that being said, we're going to dive into my growth portfolio, kind of growth / value portfolio, but mainly growth, focusing on these companies because I've seen them appreciate value. They either go down or go up. They're very focused on media as much, and any little thing can make the stock jump or obviously decrease. But anyways, the main company that I own within my growth portfolio is Apple, ticker symbol AAPL. I bought the company fairly good prices. I bought it at $125. I bought it at $147. I bought it at $150, $160, and it's literally $192 now. But I haven't bought any since. But the average cost base is $147.66. With that being said, I have over 45.22 shares. I don't know if I said that already, but I'm really excited about this company. Anyways, I think we all love Apple. But anyways, my overall total current value within Apple is $8,703.42. With that, my percentage, my overall gain percentage within the market, total gain, is 30.33%. I figure that a lot of people probably bought Apple and are doing it, and really excited about how it's appreciating value. I do want the shares to go down because I like purchasing the companies when they are cheaper and more affordable, rather than right now. I'm not really going to want to buy Apple because its valuation seems too high for me, but still overall great company. With that being said, in my second stock within my growth portfolio / value is ticker symbol AXP, American Express. My average cost basis is $151.30, and I have over 10.61 shares. Now, my current value within American Express is $1,861.41. And my overall total gain with this stock is 15.95%. Very, like anything else, I'm very grateful for owning this company at a very cheap price, because these companies tend to go up and down very fast, and I'm just grateful for that. Anyways, my third stock, I believe that everybody knows, and most likely a lot of people are all about the hype, is Google, ticker symbol GUGL. Sorry. Anyways, sorry, the braces. But anyways, my average cost basis is $109.72. I started loading up on Google around, I believe, 2022, or it was after the stock split, and I bought it around 120, 130. Then I started buying it down 117, all the way to 100, and I stopped buying. But I should have wished I would have bought more. Honestly, the stock is doing really well this year. But like anything else, I was more focused on other assets and driven by other things within, day-to-day life. But anyways, my overall total gain, my overall value within Google is $4,426.22. With this, my total gain percentage is 9.27%. And it was honestly very low. Like you're talking, I was down literally like 15% once to 20% in the stock for a while, and I just continued to hold on to it. I'm more of a in the long-term investor, looking for the high gain within the market, looking to basically dollar cost average and to not panic in any situation. So yeah, I would believe that me sticking toward it and being patient, the stock eventually went up. And now I'm basically up a good amount. With that being said, my last stock within no my then again my next stock is Target, ticker symbol TGT. This is a recent stock that I just bought, given that it's went down. I believe Target has ability to grow. I'm not looking to possibly own it long term within this company, but I might make some profit out of it just because of its overall balance sheet. A lot of negatives, leverage to cash flow is very low, and the overall company, I just love the company for like reasons pertaining to it being a good service for community and having great products. But I'm looking at the company and owning it for not particularly its overall balance sheet, because there's certain things I don't like about its debt, its payout ratio. I don't like its overall liabilities. I just really don't like that it's in debt. But I do like that there's a lot of hype in this company. So I'm looking to probably just own the company for a little bit, make a little bit, quick bucks, but not worried about probably long term, depending on how like things reflect and, earning reports and how they change over time. With that, that is Target. But no, so I average cost basis is about 130. I just recently picked it up, 130.95. My overall quantity is 3.054 shares, and the current value is $411.86. My total gain recently is 2.98%. I believe it just went up recently. And yeah, my last stock is ticker symbol TMUS, T-Mobile. My average cost basis is 139.57. And the overall quantity I have is 16.835. Now, my current value within T-Mobile is 2,345.62. And my total gain is negative 0.17%. Now, T-Mobile is a company that I see has an ability to obviously be around long term. I currently have T-Mobile. I love the services. I just love the overall communications. They're purchasing more things related to building a stronger brand for their company. I remember I used to have Sprint, and then T-Mobile bought out Sprint, and then I used to have Metro, and T-Mobile bought out Metro. You have T-Mobile buy Metro, and I believe the company is just expanding long term and being a well-provided communicational service, and it has the ability to continue to grow long term. So I'm looking forward to holding this stock regardless of it being down. I'm looking to continue to hold the stock forever. But anyways, let's dive into my retirement account, which is I have a Roth IRA. Mainly wanted to start a Roth IRA at a young age. The faster you start, the better. Basically, you don't have to worry about being taxed after 59 and a half. You don't have to worry about being taxed. As long, unless you do want to withdraw, Fidelity has this ability where you could withdraw only the money you put in, but as long as you don't withdraw the profit, you're good. But I'm never really going to withdraw. I'm just going to focus on continuing to invest and continuing to make more money, with my overall tax-free account. Anyways, in my Roth IRA, I really bought Ford a long time ago. I only purchased it just as a share, but I had to put it in here anyways. So I have 0.67 shares. The average cost basis is 14.99. I bought it because I wanted to see how the Roth IRA. This is kind of when I started investing, and I had to purchase a stock. I wanted to see how it worked, and I purchased Ford. I still haven't sold it. I don't know. I just think that it's probably good for me to have it just to see how seeing how it would play out long term. I know that owning car companies aren't really that appreciated value. They go down a lot, and they don't really have good, earning reports, balance sheets, income statements, cash flows. Car companies don't appreciate as good compared to other companies. Anyways, my current value is $10.16, and my total gain is 1.65%. With that being said, I have a Fidelity Index fund within my Roth IRA, and this mainly equates to most of my portfolio. I have bought this Fidelity Index fund. It's called FIX, I believe FIX. Ticker symbol FXAIX. And I bought it at a great price. I knew that obviously owning like 500 companies was great, and it's basically the same as owning VTSAX or VTI or like any other index funds or ETFs that track 500 companies. They're not really that different, and I saw it as the cheaper one compared to buying like SPDY, I believe, which is like was out $400-$300, and I was like, I'd rather just purchase multiple companies and index fund and have be tracked, and with little 0.01 expense ratio. So I was like, that was really like looking toward me at the time. So anyways, before I keep rambling on, I have bought it at 128.63 on my average cost basis. My total quantity is 36.959 shares. This like makes up literally 90% of my Roth IRA. My current value is $5,736.03, and my overall total gain is 20.65%. It's a really big one. Anyways, the next stock/dividend ETF that I own is going to be Schwab, ticker symbol SCHD. I originally had it within my value portfolio. I had a good amount of shares, and then I sold it because I was up in profit, and I wanted to sell it for another company. But then I wanted to buy and purchase it for my Roth IRA because like it's more makes sense. I have an average cost basis of $72.58, and my overall quantity is 1.928. I haven't really put that much in my Roth IRA lately, so obviously that's why I have low numbers. And the overall current value is $140.84. My total gain within this dividend ETF is 0.65%. With that, my next ETF is going to be ticker symbol VOO. It doesn't tell me the average cost basis right now, but I have over 0.594 shares, and my current value is $242.38. I believe that my percentage total gain is around probably 3%. It doesn't really show me right now, but let's dive into the next one. My last ETF that I own is VTI. Reason I chose mainly to own VTI rather than other index funds is because Vanguard does a really good job at be able to maintain like the top 500 companies, and that's why I've chosen these are the more popular ones too. And I've done my research, so obviously I believed in these specific ETFs. Anyways, my overall average cost basis for VTI is $198.48. I have 1.011 shares. Like anything else, I haven't really bought that much in my Roth IRA recently, but I do still put money here and there because it's important. My goal obviously is to get the max of around $6,000 a year. My focus isn't much more focused on continuing to buy and purchase more and more companies. But anyways, my current value is $223.37, and my overall total gain is 11.31% within VTI. With that being said, I have a grand total of $34,147.90. My overall total gain, which has beaten the market average 10%, is 15.88%. That is my overall total average gain within the market over the past year and a half or two. And my total gain within the overall portfolios is $4,646.62, which creates to a really good overall good value, to given that I've only been investing for around nearly almost 2 years. With that being said, in my M1 Finance account, I have over a value of $399. And then again, I just started this portfolio, so I'm not really worried about the amount at which I have. Focused mainly more on, investing here and there, $100, $200, and, hoping to build this portfolio with my friend. It has the same exact companies as I described in my Fidelity portfolio. It's literally the same thing. My friend and I agreed that my portfolio and the companies that I own were very effective, so that we would use my companies. Then again, I did ask him if he wanted to, change it, and most likely we'll change it, but I will update you guys within a couple of months on my portfolio here and there. But anyways, make sure to like, comment, subscribe, and remember, this isn't financial advice, so make sure to always do your research when investing in stocks and investing in overall index funds and companies as well. Whether it is any asset you're trying to own or purchase anything, you need to seek out an advisor, and this is only for educational purposes only. Make sure to like, comment, subscribe, and leave your comments below. Thank you.